reaction from you? I mean, what do you think of the surprise midnight Turkish delight?
I think whenever we've had an emergency meeting of the Turkish Central Bank, they tend to do it at midnight, so it's a normal timing for them. Certainly the rate rise was much larger than expected. The belief was they needed to get ahead of the curve, but most were looking for about a 250 basis point increase in rates. Instead, we saw a far more dramatic reaction. Not only that, but the central bank have completely reversed their recent policy direction. In the past, due to pressure to avoid rate increases in the domestic economy, we've had this complicated structure of interest rates with a multiple benchmark rate scenario. Now we're going back to one benchmark rate. That's a 1 week repo rate. That just went up from 4.5% to 10%, so that's a high 5.5% rise. The central bank looked to be getting ahead of the curve.
And markets so far, Tom, seem to be liking this. So we've got Turkey now. Who's next? Which country is likely to move next?
Well, if we look around the emerging markets, of course, before Turkey raised rates, we had the Reserve Bank of India the day before by 25 basis points. And we're expecting further rate increases from emerging markets. If we look at the so-called fragile five, these are the five economies that have seen very sharp depreciations of their currencies ahead of Fed tapering. We also have Indonesia, South Africa, and perhaps Mexico as well. We do worry about South African inflation. If we look at the rand, it's been pretty much making 3-4 year lows against a range of currencies, even more when we look at sort of the sterling rand exchange rate. So there might be some pressure there. So far, the authorities have said they're fairly relaxed about weakness. Maybe the tourism inflows will offset domestic inflationary pressure. But all over the world, we're seeing pressure on emerging market central banks to control those inflationary pressures, to reduce those current account imbalances, and to self-insure against what we expect will be further Fed tapering this evening.
Okay, we're talking about Fed tapering. We've got the FOMC, we've also got RBNZ and Carney. What do you expect out of those events?
I think with the FOMC, it's steady as she goes. A lot of the empirical work about how Fed tightening in the 90s and previously led to inflows and outflows from emerging markets are that if the Fed commits and stays on the path to which it has designed, then there are no surprises to the markets, and actually the net outflow from emerging markets is reduced. It's only if there are surprises. So steady as she goes for the Fed, continue to taper, do not surprise the markets, do not show a panic reaction, I think would be the best outcome there.